With Canada's 2023 budget coming out just this week, lots of Canadians are wondering, okay, is this going to impact the amount of tax that I pay as a Canadian citizen? So that's what we're going to go over in today's video. We're going to cover a tax that's going to apply to absolutely every single Canadian, one that was pre-existing but has recently changed, and one that could impact some other Canadians depending on your income level. Let's get into it. This is a pre-existing tax that is changing as of today. The number is going up. And of course, this is the carbon pricing or the carbon tax that the Liberals brought in a number of years ago. This went into effect as of today, and it's not an April Fool's joke because the carbon tax is going up by 30% from $50 per ton to $65 per ton, and that's being applied to all of the places where the carbon tax already exists, which is Ontario, Manitoba, Saskatchewan, Alberta, Yukon, and none of it. And on July 1st for Newfoundland and Labrador, Nova Scotia, and PEI, this is going to apply as of that date, July 1st. But what does this actually mean for you and your pocketbook? It's a rather controversial tax, right? Because we have the Liberal government saying, okay, the average Canadian receives more as a result of this tax because of the climate action incentive payment, the sort of rebate here, while the Conservatives are saying, okay, you're actually spending up to $1,500 more as a result of this tax. So where are we getting these two different definitions? Let me show you the details here. And it's interesting because both sides are actually using the same report but getting different numbers from it to sort of suit what they want to say about it. Let me explain here. There's two different charts in here. They're really easy to understand. They might look complex, but it's going to give you a far better understanding of this. Now, this first table in the report put together by the Parliamentary Budget Officer, the non-political affiliation sort of office that does these types of reports, so they're not conservative, not liberal, they're supposed to be neutral. Well, this is the first chart, and it talks about the impact of the carbon tax on people directly, right? The impact on them when they're paying for gas and when they're heating their homes, and the impact in terms of the extra dollars they're paying there relative to the amount they get via the rebate. And it impacts people with different incomes differently, right? So this first column here is describing the first quintile, which essentially means the bottom 20% of income earners, where this sort of last column here, the fifth quintile, is talking about the top 20% of income earners. And these numbers are tracking the sort of net cost on an individual. So if we see a negative number, that means that they're actually getting money back, right? And we can see here on average for every single different province across all of the different sort of income brackets, we can see that people are, based on this chart, getting more money back than they're paying as a result of this carbon tax. But there is a big problem with this chart because this chart only measures what you specifically pay for and what you pay the carbon tax on, like heating your home, paying for gas, these types of things. But that vastly underrepresents the actual cost of the tax because this carbon tax applies to all areas of the economy and can sort of hit you in indirect ways, like the increased cost potentially on groceries if truckers have to pay more to fill up their trucks. You can sort of think of that as an example of some of the ways that this can trickle into other areas that you might end up paying for. And that's exactly what this next chart shows and where the Conservatives tend to get their numbers. This chart shows both the fiscal, which is the chart that we looked at before, like the actual amount that you're paying, and the economic impacts, which is talking about the sort of broader effects of this and sort of puts those together to get some more accurate numbers. And this tells a different story, right? It shows that the average household in each of these provinces will pay like over $1,000 in additional costs as a result of the implementation of this carbon pricing program. But you will notice also that the bottom 20%, even in this study, will receive more back from the rebates than they would sort of spend as a result of this, even considering all of the economic impacts. So the bottom 20%, well, you're probably going to get more in your pocket than it's going to take away. But for the sort of top 80%, most of those folks, when you consider the broader economy, will end up paying more as a result of this program. But what does this actually mean for your pocketbook? Well, a researcher at the CCPA, Canada Centre for Policy Alternatives, albeit a slightly left-leaning research organization, says that this is just an incremental increase, but it's not actually going to be a huge change. It could mean like a $1 jump per tank, depending on how big the vehicle is. For the end user, the amount that you're actually paying for gas likely isn't going to go up a huge amount, but on aggregate, when you consider all of the impacts throughout the economy, well, as we saw in those previous charts, the impact is a little bit greater. Next, we need to talk about a different way that income taxes are treated. You might not know that there's actually an entire parallel income tax system that runs alongside the typical income tax system that you might be more familiar with. Let me explain. This parallel tax system is something called the automatic minimum tax, and I think it is best explained through an example. So let me show you this. Let's say that there are two different Canadians making $200,000 a year. I know that's a really high number, but stay with me here because it'll help you understand what this AMT is. So this $200,000 income earner, well, they typically pay around $75,000 in tax and end up with a sort of net pay of $125,000 in earnings. Then this second person who is earning $200,000 looks over here and says, hey, that $75,000 in tax that you're paying, I think that that's too much, and I'm going to try to take advantage of the tax system and write off a bunch of different things, different expenses for my businesses or for the income that I'm receiving or other sort of tax write-offs. And I'm going to, instead of claiming $200,000 of income, write off enough that I'm only claiming $100,000 in income. Now in Canada, the tax on $100,000 is closer to $30,000 of tax, obviously a lot less than the $75,000 that this other $200,000 income earner had to pay. Obviously, the government doesn't like this one as much because they don't get paid as much tax from this person who writes off all of these things. And that's where this AMT or alternative minimum tax comes into play. When the AMT is applied, well, the government would say, okay, we recognize that you're only showing $100,000 of income here, but we want you to calculate your taxes again in a different way, and if you end up having to pay more through this different way, the AMT way, then we're going to make you pay whatever amount higher. And they do this by saying, okay, there's a whole bunch of things that you wrote off in order to reduce your income from $200,000 to $100,000 that we're not going to allow you to write off anymore, or we're going to allow you to write off a smaller percentage of it. So maybe this person who could write off $100,000 previously under the AMT rules, maybe they'd only be able to write off $40,000, and then they're stuck paying taxes on $160,000, which would maybe look more like $55,000 paid in tax. That gets a little bit complicated, but the only thing you really need to take away from all of that, and the only thing you really need to remember, is that the AMT, or the alternative minimum tax, is a separate tax system that's applied to people mostly who will write off a bunch of expenses and sort of deduct that from their income, take advantage of the tax system so that they're paying less tax. And this AMT is something that the government is planning to change so that people who have to deal with this AMT are going to be paying a higher tax rate if they have to pay sort of the AMT instead of the normal income tax rate. They're raising it from 15% to 20.5%, but at the very same time, they're kind of making it so that this applies to less middle income Canadians, raising one of the exemptions from the AMT from $40,000 to $173,000, meaning that in order for you to have to pay a significant amount more as the result of the AMT, well, you'd have to be writing off like $173,000 roughly. I'm simplifying here, but that's the idea. And the budget predicts that with this change, 99% of all of the alternative minimum tax that is paid will be paid by people who make, their families make over $300,000 per year, and 80% of the total AMT will be sort of paid by people who make more than $1 million per year. So all in all, not an awful change. It'll make sure that the sort of middle income earners have this applied to them less often, and the people who are making significantly more money in the sort of $200,000 to $300,000 range plus, well, then this will apply to them at a higher rate. And another tax change that was inside of the budget that was just released last week was an increase to the amount of people who will be eligible for automatic tax filing. This is a certain group of people that the CRA identifies and are invited into this program where they can actually just call up the CRA, answer a couple security questions, give them a little bit of information, and then they'll file your taxes fully for you on your behalf. The idea of this is that there's a lot of Canadians who don't make a lot of money, and as a result, they're like, okay, I'm not really incentivized to do my taxes because I'm not going to need to pay anything because I'm not making a whole lot of income. Now, this is supposed to make it easier for people to file their taxes, even if they're in this sort of lower income situation, so that they're more able to be eligible for some of the low income wage supplements and benefits that the Canadian government provides. Right now, only about 53,000 people across Canada are using this system, and it looks like it's made it a lot easier for them. So the government is targeting by 2025 to try to increase the amount of people that are eligible for this File My Return option to 2 million people by 2025. Now, that wouldn't result in a full 2 million people taking advantage of it, but expanding the amount of people that could be eligible for it so that they can make up their mind on whether or not they want to do it. All in all, I don't think that this budget includes that many groundbreaking changes to the amount of tax that Canadians will pay, but these are some of the most important points. Now, of course, people will make the argument that, okay, there was a lot of new spending introduced in this budget, and that could or possibly be inflationary, and that is sort of a tax on Canadians who save, right? Because if the value of your dollar goes down, well, then people who are saved and potentially not invested or don't have access to sort of holding assets other than cash, well, it's kind of like a hidden tax on them because their dollar's worth a little bit less. Now, the extent to which this additional spending will be inflationary, it remains to be seen, right? We can make predictions, but we're going to have to wait to see down the line, does the way that this money is being spent actually impact the price of goods and services here in Canada? I'll be letting you know as we get new data from Stats Canada. Let me know what you think about this. Were you expecting some other changes in this budget that weren't there? Let me know down in the comments. I read every single one and I try to get back to a bunch of them. Subscribe to the channel if you haven't already done so and appreciate this Canadian focused sort of niche content. Thanks so much for watching the video. I hope it helped you out at least a little bit. Man, I'm forgetting my standard outro. But either way, I'll see you next time.